Hey everyone, welcome back to Corporate Decoder, the place where we translate corporate jargon so you don't have to. Today we are looking at a fresh 8K filing from Nuburu Inc. And let me tell you, this one has some interesting moves happening under the hood. Get ready, because we are about to decode what this all means for the laser company. Nuburu Inc., a company making waves in industrial lasers, has just filed their latest report, and it looks like they've secured some crucial funding through a convertible note issuance. This is a big deal for a company like Nuburu that is often looking to fuel its growth and development. Let's dive into the details and figure out what this means for you. So on August 18th of 2025, Nuburu, or the company as they call themselves in this document, made a deal. They brought in some cash, specifically 225,000, and they did this by issuing something called a convertible note to a company called Indigo Capital LP. Now this Indigo note is a bit special. It's for 225,000 face value, meaning that's the amount the loan is worth. It doesn't pay any interest as long as everything is on track, and it matures on August 17th next year. But here is the really interesting part. The conversion price is set at 80% of the lowest trading price of Nuburu stock over a 5-day period before it gets converted. This conversion feature means that Indigo Capital LP can turn this debt into actual shares of Nuburu stock. But there are limits in place. They can't take more than 19%. They can't take more than 19.9% of the company at any single time. This is a common strategy to prevent the lender from suddenly owning a huge chunk of the company and potentially influencing its operations too much. Another key detail is that this new note is subordinate to their Series A preferred stock. This means if the company were to face financial trouble like liquidation or winding up the Series A, preferred stockholders get paid back before Indigo Capital LP. For Indigo, this might mean a slightly higher risk, but it also allows them to provide capital when other options might be limited. And crucially, it allowed Nuburu to get the funds it needed. Like most financial agreements, this deal comes with the usual paperwork. The document mentions customary representations, warranties, and covenants. Basically, it means both Nuburu and Indigo Capital LP made promises to each other about the state of things and how they will behave throughout the agreement. There are also standard clauses about what happens if things go wrong, like if payments aren't made or if there are legal issues like bankruptcy. These are all standard clauses about what happens if things go wrong, like if payments aren't made or if there are legal issues like bankruptcy. These are all standard clauses designed to protect both parties involved. Now, this part tells us how the deal was structured. The securities, meaning the convertible note, were sold in what's called a private placement. This means they weren't offered to the general public. Instead, they were sold directly to an accredited investor. Indigo Capital LP, in this case, this type of sale is exempt from the usual registration requirements of the Securities Act, which makes the process quicker and less costly for the company. Selling directly to a professional investor like Indigo is pretty common for companies needing capital without going through a full public offering. ECOs, the X means they weren't offered to the general public. Instead, they were sold directly to an accredited investor. Indigo Capital LP, in this case, this type of sale is exempt from the usual registration requirements of the Securities Act, which makes the process quicker and less costly for the company. Selling directly to a professional investor like Indigo is pretty common for companies needing capital without going through a full public offering. Before we move on, let's quickly touch upon how Nuburu is trading. Its common stock is listed on the NYC American LLC under the ticker symbol BURU. This is a vital piece of information for anyone looking to invest or track the company's performance on the stock market. It's also noted that Nuburu is an emerging growth company. This designation means they can take advantage of certain regulatory benefits smaller companies often receive, which can help them manage their growth and reporting responsibilities while still being transparent with investors. So what's the big picture here? Nuburu has brought in 225,000 through a convertible note with Indigo Capital LP. This is a flexible source of funding that can convert into stock. Once certain conditions are met, it provides immediate cash for Nuburu's operations and development, while giving Indigo the potential to benefit from the company's future success. This kind of financing is often a lifeline for growth-oriented companies that are not yet consistently profitable. For Nuburu, this capital infusion could be key to funding its research, development and expansion plans in the competitive industrial laser market. Now, for my take on Nuburu, based on this filing, they are actively managing their capital needs by leveraging a common but important financial instrument. The convertible note structure allows them to secure funds now with a future option to convert debt to equity. which is great if the stock price performs well. However, the subordination clause means existing preferred shareholders have priority in a worst case scenario. The limits on conversion are also important to watch as they prevent massive immediate dilution of existing common stockholders' ownership. One of the biggest risks for a company like Nuburu is market adoption and competition. Their laser technology is innovative, but success depends on how quickly industries embrace it and how they fare against established players or other emerging technologies. Another risk is their ability to hit profitability targets so they can manage their debt effectively and make the conversion attractive to Indigo Capital LP. The opportunity lies in the growing demand for advanced laser solutions across various sectors from manufacturing to medical to potentially even broader applications if their technology scales application and to debt effectively. And make the conversion attractive to Indigo Capital LP. The opportunity lies in the growing demand for advanced laser solutions across various sectors from manufacturing to medical to potentially even broader applications if their technology scales players or other emerging technology, attracting to Indigo to potentially even broader applications. If their technology scales, overall this filing shows Nuburu is taking proactive steps to secure the funding needed to push its business forward. The convertible note is a smart tool in their financial arsenal, but like all financial instruments, it comes with its own set of conditions and potential implications for shareholders. It's a delicate balance of growth, funding, and managing potential dilution. Alright, that's our deep dive into Nuburu's latest SEC report. What do you think about this convertible note deal and its potential impact on the company? Let me know your thoughts in the comments below. And if you found this breakdown helpful, do give this video a thumbs up and subscribe for more corporate decoded content. We also have a fantastic community over on Discord where we discuss these filings and more. You can find the link in the description below. Thanks for watching and I'll see you in the next one.